Welcome to Bizworld. I'm Nurin Razmin. The FBM KLCI's uptrend has been relentless since mid-April as accumulation on blue chips by both local institutions and foreign funds continues. According to Rakuten Trade, the benchmark index, currently hovering at a 52-week high, is anticipated to trend higher, underpinned by reasonable valuations. The firm believes a decisive breakout from the 1,600 level is required, as this has been a tough resistance to topple. The research house added that the influx of major tech companies' bigwigs into Malaysia recently may be a prelude for exciting times to come. Thus, in view of the cumulative foreign direct investment, the firm reckons the banks and construction stocks to be in focus. Foreign buying of Malaysian equities surged 3.6 times to 1.06 billion ringgit last week, as purchases were recorded daily throughout the week. According to MIDF research, this marked the strongest weekly net buying figure in 2 years, with the last instance of such substantial inflows observed in March 2022. The sectors that saw the highest net foreign inflows were utilities, financial services, telecommunications, and media, while the sectors experiencing the highest net foreign outflows were energy, plantation, and property. On the other hand, local institutions took a breather from their strong support for the local market when they net sold 943 million ringgit after 9 straight weeks of net buying. Local retailers, meanwhile, sustained their net selling streak for the 8th consecutive week, totaling 112 million ringgit. Bursa Malaysia ended higher today, led by banks, energy, and oil and gas sectors. At market close, the benchmark FBM KLCI rose 7.8 points to 1,597.39. The market breathe showed 657 counters were up, 447 counters were down, and 499 counters traded unchanged. According to Bank Muamalat, regionally, most markets were also in the green, as hope for a U.S. rate hike has been reinvigorated by the lower-than-expected non-farm payroll last Friday. The banking sector's year-to-date YTD loan growth of 5.4% annualized aligns with the projected growth range of 4 to 5% this year. According to M Investment Bank Berhad, the industry loan growth expanded by 6% last March, driven by stronger growth in household and non-household loans. It added that household loan growth was marginally higher at 6.3% year-on-year in March, with sustained growth in mortgage and personal loans. The bank also noted that non-household loan growth last March rose to 5.5% year-on-year, driven by financing to the transportation, storage, communication, finance, insurance, and business services sectors. Singapore's private business continued its impressive growth for 14 months of improvement, with S&P Global Singapore Purchasing Managers Index standing at 52.6 in April. New orders continued to expand for 16 straight months due to a better underlying demand conditions. Business sentiment improved among private firms, reaching its highest level since last November, with 39% of companies anticipating better market conditions and sales support efforts in the upcoming year. Meanwhile, cost inflation eased slightly, with lower wage inflation offsetting faster purchase price growth. And that's all the time we have for Bizworld. I'm Nurin Razmin. Keep tuning in to TV3.
Get fired up for NFC, the world's most toughest competition.